something historic is happening behind the locked doors of the world's most powerful central banks. In 2026, global financial elites are quietly accelerating their exit from the US dollar system, and the evidence is now impossible to ignore. For decades, the US dollar dominated world trade, oil markets, and global reserves, but beneath the surface, a silent reset has already begun. Central banks are buying gold at the fastest pace in modern history. Some nations are now repatriating their physical gold reserves back home. Others are openly reducing their dependence on the dollar entirely. This is not a conspiracy theory anymore. This is a measurable global trend. The world's largest financial institutions are preparing for something massive, and average people are only beginning to notice the warning signs. Inflation has quietly destroyed purchasing power across the globe. Government debt levels are exploding beyond historical records, and trust in fiat currency systems is slowly fading. For centuries, gold has survived every empire, every war, and every financial collapse. That historical memory is now returning to the minds of central bankers. China has aggressively increased gold purchases for years. Russia accelerated its gold strategy long before sanctions escalated, and emerging economies are now following the same path. The message is becoming clearer every month. Physical assets are replacing paper promises, and the biggest players are moving first. History shows that ordinary citizens often arrive late to monetary transitions, but this time, the clues are visible in plain sight. To understand this reset, we must first understand the petrodollar system. For decades, global oil transactions were largely priced in US dollars. That created massive global demand for the dollar. It gave America extraordinary financial influence over world markets, but cracks in that system are now expanding rapidly. Several nations are now conducting trade outside the dollar entirely. Energy markets are slowly diversifying away from dollar settlement systems. This trend may appear slow today, but monetary shifts often accelerate suddenly and violently. History is filled with reserve currencies that eventually lost dominance. The British pound once ruled the world before losing reserve status. No monetary empire lasts forever, and global debt levels are now raising serious concerns about the future of fiat currencies. This is why gold is quietly returning to the center of global finance, because gold carries no counterparty risk. It cannot be printed endlessly by governments, and it has survived thousands of years of monetary chaos. But there is another asset gaining attention inside this reset. An asset many investors still underestimate. That asset is silver. Silver has historically acted as money for ordinary people, but today, silver also powers the modern industrial economy. It is critical for solar panels, electronics, and advanced technology. That dual role makes silver uniquely important in the coming decade, and some financial educators believe silver remains deeply undervalued. Robert Kiyosaki has repeatedly warned about the dangers of fiat currency systems. He often describes gold and silver as real money, and millions of investors are beginning to pay attention. Silver's affordability makes it accessible to ordinary households. Unlike real estate, it requires no massive debt. Unlike stocks, it carries no corporate management risk. And unlike fiat currency, it cannot be created out of thin air. Industrial demand for silver is rising rapidly worldwide. Meanwhile, physical silver inventories remain historically tight. That imbalance could become extremely important in the years ahead. Some analysts believe silver could outperform gold during a monetary reset, not because gold is weak, but because silver remains dramatically smaller and more volatile, and small markets can move explosively when demand surges. That possibility is attracting growing global attention, especially during a time of increasing financial uncertainty. People naturally search for safety during unstable periods, and history shows that hard assets often regain importance during monetary crises. This may explain why precious metals are returning to public discussion again. The conversation is no longer limited to survivalists and fringe investors. Major institutions are now openly discussing reserve diversification, and ordinary savers are beginning to question traditional financial assumptions. The old financial playbook may be changing faster than most people realize. That does not mean the dollar disappears tomorrow, but it may mean the world is entering a more fragmented monetary era, and in fragmented systems, diversification becomes critical. That is where many investors begin exploring precious metals, not out of fear alone, but because they want protection from uncertainty, and history suggests that preparation often matters more than prediction. So what can an ordinary person actually do during this reset? The first step is education. Understanding monetary history changes the way people see modern finance. The second step is reducing unnecessary debt exposure. Debt can become extremely dangerous during unstable economic periods. The third step is considering ownership of tangible assets. Physical gold and silver are not someone else's promise to pay. That distinction becomes important during financial stress. Some people choose small monthly purchases over risky speculation. Others focus on long-term preservation instead of short-term trading. There is no perfect strategy for everyone, but history consistently rewards disciplined preparation. Understanding monetary history changes the way people see modern finance. The second step is reducing unnecessary debt exposure. That gradual process is what makes it difficult for many people to recognize, but central banks appear to recognize the shift already underway, and their actions may reveal more than their public statements. The question is whether ordinary citizens will notice in time, because history rarely sends warnings twice, and the greatest wealth transfers often happen quietly before the public fully understands what is changing. This content is for educational purposes only. It is not professional financial advice. Investing involves risk. Always do your own research.